Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, August the 27th, and I wanted to just talk about what's happened in the markets last week, talk about how the markets finished up, some key takeaways today from Fed Chairman Powell's speech, and wanted to talk about some of those and what impacts those have had on the markets, and just touch base on that and help you out with that. And so last week we saw the S&P 500 finish the week up 70 basis points. And one of the key takeaways from the markets last week is the winners that have been the winners through the COVID pandemic continue to be the winners last week. We've been talking about wanting to see some more of that broad-based participation where we see more of maybe the value sector or more stocks or equities participating in the upward momentum of the index itself, where we really didn't see that. And if you looked at some of the other indexes that have been underperforming, your mid caps, your small caps, those are also negative for the week. So we kind of reversed back last week to what has kind of been the trade and the play. The top five continue of the S&P 500 continue to lead and march that index higher. Now this week we are starting to see a little bit more broad-based participation. We've had several what we call false starts, where we started to see where you've had 2-3 days of outperformance by some of the underperformers or by the value sector versus the growth sector, where we've seen it for a couple of days, but then it goes away and then we revert back to what has gotten us here to where we now are sitting over 5% positive year to date on the S&P 500. Now, one of the fascinating things about that is, as of right now, 60% of the equities in the S&P 500 are still actually negative year to date and haven't provided a positive return. So again, the winners are continuing to win in this market. The haves continue to do well. The have-nots are continuing to underperform. And we're hoping to see some more broadening out of the market and hoping that that's what we're starting to see a trend of this week. And that's going to come off of the backs of Fed Chair Powell's speech this morning that he gave in the virtual conference from Jackson Hole, Wisconsin. And one of the big key takeaways is there is going to be, and the Fed is changing a little bit of their monetary policy. The Fed has a dual mandate, and that is to manage inflation and to create an environment to maximize employment. And the Fed target for inflation has been 2%. And what Jerome Powell basically said today is he said, what we are going to do as a Fed is we are going to allow inflation to run moderately above 2% as long as the average is around and right at that 2% target. Now, what that means is, and the big takeaway from that and what's got the markets reacting very positively today, is that that indicates that rates are going to remain low for a pretty long period of time, where you're going to have to show consistent inflation to get the rates to start moving upwards. And in low rate environments, equity markets tend to do very well during these very low rate conditions that we are seeing right now. So as always, if you have any questions about what's going on with your portfolio or how these new Fed policies are going to impact you or you personally, feel free to give us a call anytime. You can reach us at 904-346-3460 or check us out online at www.riverplacecapital.com. I hope everybody has a wonderful Thursday. Thank you.